A major global economy has just gone into recession. The latest GDP data shows Canada has fallen into a technical recession after the second negative quarter of GDP in a row. And this is at a time when Canada's current account deficit is widening due to a surge in import prices and a 31% year-on-year drop in foreign direct investment. And both of these are significant bearish catalysts for the Canadian dollar, because the Bank of Canada is now going to either have to hold interest rates or possibly at some point in the future ease, just as other major economies are in the midst of a hiking cycle to combat inflation. So for those of you new to the channel, my name is John Fortune. I've been trading financial markets for over 18 years. And in today's video, I'm going to share with you my trading plan for next week, including the key buy and sell zones for multiple different markets. And I'm also going to show you why New Zealand dollar longs and US dollar longs are at the top of my list heading into next week, alongside Canadian dollar short setups. Okay, so let's start by looking at the dollar index going into next week, because we are at a very pivotal place. We've been talking about this in previous videos. And the first thing I want to draw your attention to is this chart down here, the weekly chart, because this is the big range that we've been in, testing the lows, testing the highs. And the risk is for an upside breakout, and the risk is around crude oil. Crude oil is now very strongly correlated with the US dollar, as recent data has shown. The correlation has actually been increasing. And when we look at crude oil later on in the video, you will see how crude oil is actually setting up a significant bullish pattern. And if crude oil starts to break to the upside, this is going to drag the US dollar higher with it. But the second thing I want to show you here going into next week is you can see within this range, we actually have in the daily time horizon a second range. We have two tests up here, two tests down here, and generally speaking, you need 4 points or 4 tests if you're going to form some kind of technical pattern. And so we can clearly define this as a range. So going into next week, what I'd be looking for is I'd be looking for the dollar index to break over the 99.34. And once we break through the 99.34, this should drag it higher to the top of the larger range over here. And this is where we get this inverse head and shoulders. So the 100.257, or to be more precise, these highs just above it, this is where we could see a very significant liquidation in dollar shorts. And again, if we look at the monthly chart, as many of you know, we're sitting right at the channel low going all the way back to the 2008 financial crisis. Now, if we zoom in here on the monthly chart, you can see that we actually have this reversal month. And now we've finished the month and we're heading into a new month, we can actually get a follow through month. So very often, you know, if the market is going down, you get this down month over here. It's quite rare to have a down month and then a major reversal and a breakout at the same time. Usually you need to have one monthly candle to kind of reverse it. And it's the follow through candle the following month, very much like up here. You had a couple of candles and then you get this follow through candle. So there is a real risk now we're heading into a brand new month of a bigger breakout to the upside in the DXY. And when we go through the portfolio selection now, you will see that alongside the US dollar to the long side, the New Zealand dollar is also setting up as one of the best long plays heading into next week. Okay, so looking at the portfolio selection heading into next week, the number one currency to the long side is the New Zealand dollar. We had the interest rate decision last week. They held rates, but they did talk about a potential 2 or 50 basis points increase, which is 2 interest rate hikes by the end of the year. And so we started to see money flowing into the New Zealand dollar last week. This is now going into this week one of the markets that I want to be on the long side of. And we're going to look at specific New Zealand dollar setups and the key buy and sell zones in the New Zealand dollar setups as we go through the video. The second currency to the long side is the Australian dollar. The Australian dollar has been outperforming for quite a while. We've been basically looking to trade to the long side of the Australian dollar for quite a while. Now it's kind of peaking, it's kind of moving sideways, but what's very noticeable about the overall regime here is that we have the commodity currency of the New Zealand dollar, the commodity currency of the Australian dollar, and then the US dollar now making its way up towards the top of this list as well, with the Swiss franc only in between the New Zealand dollar and the Aussie and the US dollar. Now, why is that significant? Because what happens is when you get inflation or a regime that's inflationary, you see an outperformance of the commodity currencies, and you tend to see that with the Canadian dollar, but we've just discussed why that's not actually happening at the moment with the CAD. But you tend to get an outperformance of the commodity currencies, and you get an outperformance of the US dollar at the same time, because commodity prices go up, the commodity exporting nations, get a stronger currency because there's more demand for their currencies as prices go up, and yields go up, interest rates go up, which drags the US dollar higher as well. So you get commodity currencies and the US dollar going up. So if you're trading stocks, for example, this is a great indication that right now we are looking at an inflationary regime, and stocks tend to do fairly well in inflation regime. So with that being the case, going into next week, I would be looking for New Zealand dollar to the long side, Aussie dollar to the long side, and then third, I would prefer US dollar longs because we've just discussed that regime. The Swiss franc, the pound, and the euro all tend to suffer, as well as the Japanese yen, when you have high levels of inflation or inflation regime. So for that reason, although I will be looking at some of the Swiss franc pairs to the long side, I won't be doing that versus the commodity currencies like New Zealand and Aussie, but I will be looking at that versus, say, the CAD, the pound, and the euro. So to cut a long story short, going into next week, I'm going to be focused on New Zealand dollar longs, Aussie dollar longs, US dollar longs, and at the same time, going to be looking at euro to the short side, pound to the short side, and the Canadian dollar to the short side, because we've just discussed that the Canadian economy is in a technical recession, and this is going to prevent the BOC from hiking in the same way that other major economies are to combat the current levels of inflation. And of course, the Japanese yen is actually the #1 short technically, but because of the threat of BOJ intervention, it's not a great short as it currently stands. And don't forget, guys, if you enjoy these videos or you feel you get any value at all out of them, be sure to like, share, and especially to subscribe. And if you're on a mobile device, you can, of course, hype the video as well. It really helps the channel when you do that. So a big thanks to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. Okay, so let's kick off the US dollar pairs with euro dollar. Now, euro dollar is actually forming a pretty significant bearish pattern because we have made a new low. We were talking about this in last week's video, how this is actually a trend change when you make a new low like this. And this is at risk of a setup which we call the third touch of a trend line. Third touch of a trend line can be very, very explosive. You tend to get a failure because what's happening here is you get this kind of, people look at this as an A, B, and a C, they buy in. It pushes up, it hits the channel for a third time. And if it fails to break out, all of the people who bought here start to pull their positions. And as you take out the low down here, you can get a real liquidation. So this does fit in, this technical pattern, with what we just looked at in the dollar, and also those fundamentals of higher crude oil prices, dragging the dollar higher potentially this month as well. So going into next week, you can see here is the sell zone and here is the buy zone. These are quantitative volatility zones, which when crossed throughout the week, turn a market overbought or oversold during the week, and then they reset again the next week. So roughly 70% of the time, you will stay between the blue levels, you'll push into it and revert back inside. Roughly 5% of the time, you'll push and close the week outside of this. And when you do that, when you exceed these gold levels, like we saw in the New Zealand dollar pairs last week, this tends to signal new momentum in the other direction and a change of trend. So going into next week, what I'm specifically looking for is that potential third touch of the trend line up in this area. I'm going to be looking for euro dollar to push higher, trade above the 1.17425, and this is where I'll be looking for a 1 or 2 day reversal back towards the moving average. But like I said, this is also one of those setups where you could potentially hold it for a bigger swing trade back down to the lows and a breakout lower if that is what your strategy entails, holding positions for longer than 1 or 2 days. But in terms of short-term trading, I'll be looking for a 1 or 2 day reversal from this zone. And if we zoom out to the multi-charts, you can see a couple of things that are really interesting here. Yes, we have this kind of third touch of the trend line potentially over here. We had the inside month last month, so a contraction of volatility. Volatility actually dried up in Forex, as you can see here in euro dollar specifically. And this actually led to less opportunities over the last month or so, made trading conditions a little bit more difficult, whether you're breakout or mean reversion trading. And going into this week, you can see over here in the monthly time horizon, we already lost the 9 EMA. We closed below it in the monthly. We've had this attempt to reclaim it, but very often when that happens, you tend to make your way down towards the 20. So I would suspect in the bigger time horizon, we're coming back down to here. And so any push up into this area, and we also have this weekly high sitting right here for horizontal resistance, any push up into this area above the 1.17425, that is where I'm going to be specifically looking for a short opportunity next week, either for 1 or 2 days for a short-term opportunity or for a potential swing trade for the bigger breakout to the downside. Next is GbpUsd. Now, this is a market that's a short or nothing for me going into next week based on portfolio selection. I cannot buy this market under any circumstances. And what we're seeing here is we've got this momentum sell-off, And now we've got this kind of correction. So again, we're seeing a pattern here which is consistent, because don't forget, momentum precedes price. We're seeing a pattern which is consistent with a follow through to the downside, or another way of looking at that is, of course, the DXY breakout to the upside. So what I would like to see is I'd like to see this cross back over its moving average, make an attempt to run higher for whatever reason. And this is the specific level in the sell zone next week, which starts at the 1.35719. That I'm going to be looking for a 1 or 2 day reversal from. This would be a kind of textbook head and shoulder setup. So the fact that the left shoulder is sitting inside the sell zone, this means we would be turning overbought. And again, it's an if-then process. If we push up into this area and turn overbought, I'll be looking to take a short position. So that is what I'm looking for next week, for a 1 or 2 day reversal, short-term opportunity kind of back towards the moving average. So this kind of range reversal play. Range reversal play is a range play setup that we cover in the free strategy guide, which you can download in the description in the pinned comment below. And so if we pull up the multi-charts quickly, you can see here, this is the left shoulder. And we are pretty much, just consolidating in the weekly around the 50 period moving average. But this level here, the 1.33025, this is where we could really start to see a liquidation to the downside. Why? Because we've got that initial momentum. So momentum precedes price. We'll be looking at this as a wave 1 potentially. And when you're looking at waves, you want to look at their form. Is it impulsive? Is it corrective? We'll look at the difference between this 1, 2, 3, 4 candles down, and 1, 2, 3, 4, 5, 6, 7 candles, 8, 9, 10, 11, 12. We haven't even retraced, maybe halfway, but look how many candles it's taken just to pull back halfway. This is the impulse move. This is the correction. So any kind of push higher is an opportunity to short. And as long as we don't take out this high, this is a bear flag which is developing and set to break to the downside. USD, CAD, this is a market I can only be long. I cannot short this market heading into next week. We've looked at the portfolio selection, and the dollar and the Canadian dollar are both kind of evenly matched in a way. However, the US dollar is ascending and the Canadian dollar is descending. And this is because the US dollar has those bullish fundamental drivers with crude oil and inflation and rates going higher. And we've just discussed how the Bank of Canada is not going to be able to keep up with its peers in terms of interest rate hikes, because Canada is now in a technical recession. So any kind of pullback in this market, we've got to look at this almost as a mispricing. In other words, this market should be going higher, but on its way up, it's going to do this, right? It's not going to go up in a straight line like this. So we want to be looking at this every time it pulls back, buying a dip, buying a dip, buying a dip, buying a dip. So reactively, if we can break back down below the moving average, this shows a near-term consolidation. We trade below the 1.3718. This is where I'm going to be looking for a 1 or 2 day reversal back towards the middle of the range if you're looking for a 1 or 2 day short-term range play. But again, that's where you can break through and you can go for that swing trade back to the highs if you look to hold positions longer. Either way, I can only buy this market next week. I cannot short it. Now, a really nice key level of support I'd look for is the 1, 2, 3, 4 month high over here. We have this kind of consolidation area, and you can see this high right here. It's sitting just above the buy zone, but any kind of push down into the buy zone, I would be looking for this to snap back, reclaim this. So it basically pushes through kind of on a volatility wick, and then that would be the bounce I'd be looking for to the upside, take out the prior highs. But again, for me personally, I am primarily a short-term trader, so I'm going to be looking for a sell-off, a rejection, and a 1 or 2 day rally back inside the range next week in this market. Next is UsdJpy. Now, this is a market that is basically broken. I mean, we had the intervention and we had the kind of snapback, and look between here and here how the volatility has just dried up. It's just disappeared. I mean, compare that to these moves over here, these days up and down over here. So really between here and where we are now, nothing is happening in the BOJ because nobody wants to short it, because just like New Zealand yen, you could start to run up, but at the same time, nobody wants to buy it because you could be on the wrong side of BOJ intervention. The only kind of viable setup that I see here is the 160.63. This is where the sell zone starts, would be a short right here above the prior high. But this is actually counter trend to the overall move, as we'll see in a minute on the multi-charts. It's just this setup would be on the hope of a BOJ intervention. Is that a fantastic setup? I don't think so. I think there are better markets. But if I absolutely had to pull a setup out of this, that would be it. It would be a BOJ intervention trade. But to me, that's quite high risk because there's no guarantee the BOJ are going to intervene right here. So pull up the multi-charts, you can see the issue here. We've got this kind of monthly bull flag. We had a reversal month to the upside. So if you do short here, you're shorting right into the break of that reversal candle to the upside last month. It's not a great setup. It's very high risk. And if the BOJ don't intervene, you're essentially trading a monthly breakout in the wrong direction. So patience required on US dollar yen. I think we're probably going to have to wait for the next BOJ meeting before we can start to look at the yen pairs in any real serious way once again. AUD, USD. Now this is a market, if I was kind of neutral on US dollar yen, I'm also kind of neutral on this market because both these currencies are fairly strong. However, one thing I will notice is this. We are overbought on a rolling monthly basis, and we are developing a potential head and shoulders. So if we sell off into the buy zone, there is a chance that this range holds because the Aussie is also quite strong. But the problem is if it doesn't, this is going to snap back for a month or so, and this head and shoulders probably at the very least will go 1-to-1. So I think on balance, there are actually better markets to go long against the US dollar if you really, really have to short the dollar next week. That would be US dollar, Swiss franc, New Zealand dollar, which we're going to look at next. But Aussie dollar is kind of a neutral currency for me. On balance, I think I would prefer the short. So if we take out prior highs, I would potentially look for a short back inside the range. But again, very similar to US dollar yen, this is at the top of a kind of up move. So it's kind of risky. For that reason, I'm kind of neutral on it going into next week as I am with US dollar yen. So if we pull up the multi-charts here, you can see the issue. The issue is if we get involved in the buy zone, we could potentially be on the wrong side of a head and shoulders breakout. And if we get involved from the sell zone, well, this is just the high of this kind of monthly consolidation. We could actually have an up month. So this is not a market that to me shows clear edge. Not every market all of the time has opportunities or provides real clear asymmetric reward to risk. And I do think going into next week, Aussie dollar is one of those, which is just kind of more neutral. And for that reason, I would prefer to trade the other dollar pairs that we're looking at heading into next week. Next is US dollar, Swiss franc. So now we're starting to get into those currencies which we could potentially take a short in the US dollar from reactively if we get dollar strength. And US dollar, Swiss franc would be one of them. Again, I do want to state that I prefer to be long the US dollar. It's just that the Swiss franc is also a strong currency at the moment. And so if we trade into the sell zone, you can see there is 2 key areas of resistance right here. Daily resistance above the 0.78994, which I would consider a potential short to the downside back inside the range towards a moving average for a 1 or 2 day reversal. What I would caveat this with is I would really want to see some strengthening of the US dollar here, but without the US dollar really ripping or breaking out versus other currencies. If this starts to fly higher, then I may just sidestep that because, again, we have to take into account that risk of a bigger DXY breakout, and I don't really want to be on the wrong side of that. So going into next week, I will consider potential shorts in this area in US dollar, Swiss franc, but I will do so, with kind of caution. And ideally, I would like to be long the dollar given the opportunity next week. And so if we just pull up the multi-charts, you can see the problem here. If we get involved in US dollar, Swiss franc from the buy zone, this is actually a significant breakout below last month's low. Look at this monthly candle here. This is the one thing I don't really like about this, is that when you have a very, very, very small bodied month, you tend to get a bigger breakout either to the upside or the downside. Now, the overall trend is to the downside, which is why on balance, I'm still preferring to look for a potential short. But, this could very easily break out and start to come up to 20. So something to consider going into next week. The next currency pair we're going to look at, New Zealand dollar, is my favorite for potentially shorting the dollar if the opportunity arises next week. Next is New Zealand dollar. Now, this is the currency pair that if we start to get dollar strength and the opportunity arises to short the US dollar, this would be reactively the currency pair I would prefer. We do have a really nice high over here, which sits right at the buy zone, and you can see the moving average is now in the buy zone, which shows we're starting to pull away. We've got momentum. And this was a really, really strong move last week. This was actually a reversal week because it took out the second upper bounds in a number of these markets, or second lower bounds. And this tends to signify a trend change. So going into next week, any kind of pullback into this area, I am going to be looking for a 1 or 2 day reversal. This is also, and you'll see this with all of the New Zealand dollar pairs, they are what we call Monday, Tuesday reversal plays. We've actually had Monday, Tuesday reversal plays over the last 3 weeks, and Monday, Tuesday reversal plays aren't always there. I mean, what it means is we've had pretty much 3 weeks in a row where we've had directional moves which haven't reversed intra-week. That's quite rare. Generally speaking, weeks tend to mean revert during the week. And so to have kind of 3 back-to-back weeks where we've been seeing this, it shows that we are really starting to see volatility coming back into Forex after a period of low volatility. And so if we pull up the multi-charts here, what I like about this is we have a really straightforward setup, because if you look at this on the monthly time horizon, you can see the prior month's high is right here. And so any kind of pullback would simply be a retest of last month's high, and that would be the bounce from the buy zone. And I think there's a pretty good chance we're coming up to the 0.60747, which is the 50 period moving average here in the monthly time horizon. You can see we tested it here. We're actually in a consolidation overall. And if you just look at this on the weekly time horizon, that is a big, big, big move within a given week. And so even if we do get the bigger DXY breakout, and I know, the New Zealand dollar is not part of DXY, but if the DXY breaks higher, the New Zealand dollar, will face headwinds. You can see that this kind of week would be quite hard to reverse. It's possible to reverse this all in 1 week, but to come all the way back down, and kind of close down here, that is going to take some doing. And at the very least, you would not expect it to come down and actually break out to the downside next week. So I am looking for long opportunities in New Zealand dollar next week if we can trade below the 0.59225. Okay, so let's have a look at Bitcoin and Ethereum before we move on to some of the non-US dollar Forex pairs, which are setting up nicely heading into next week. And then we're going to finish the video with crude oil, gold, and silver. And crude oil, a really important market from next week onwards that you need to pay attention to and have on your watch list. So looking at Bitcoin here, we've kind of been tracking this bear flag, and we've been tracking the break back through the inside month high. And now we've broken down below it, we pulled back, we bounced off it, we got the liquidation, stop losses got taken out, and now we're on the underside of it. So what I like about this is you can see we're just about to finish this reversal month from the 9 and 20 EMA. And look at this. This is the big bear flag, which is now setting up a potential run to the low. Now put all of the pieces of the puzzle together. And again, when do we tend to see Bitcoin, Ethereum selling off like this? When you get kind of risk off or inflation going up, rates going up, and the dollar tends to go up as well. So even Bitcoin and Ethereum, to me, are hinting at the US dollar potentially breaking out to the upside in line with those fundamentals in crude oil. So going into next week, you can see we're kind of sitting underneath last week's low. And, I would wait for this candle to close, this monthly candle. And then from kind of Monday onwards, I would be looking at a push up into this area, kind of into, the 20 period to the kind of 50 period. You could look at this almost as a dynamic sell zone. This is where I'd start to look for the next move down. And I would first and foremost look down to the channel low, because you can see we've got the bottom of the bear flag channel, which I do think will break. But just for an initial target, I would be looking down to roughly the 72430 by the looks of it. So once we actually push through there, that's where you can start to look, first of all, for kind of just breaking this up into trades, right? Kind of pull back, sell off into here. That would be kind of the next trade, this kind of bear flag from here. And then once you break here, let the buyers and sellers kind of fight. And then once the sellers win, you could look for the pullback, and then the continuation lower down to the low over here at the 59, you say 60,000 level. So going into next week specifically, I'd wait for this month to finish, look for a bit of a tick higher to start the month. The monthly candle kind of opens, pushes up, forms the wick, and then I'd be looking for that reversal lower into the trend line. Ethereum, of course, is a more high beta version of Bitcoin essentially, and relatively weaker. So if you're going short either of them, Ethereum is most likely going to be the better short. But again, we're looking to now break down to the 17420. And this is the breakout of the channel already. So notice how we came down. Look at how we bounced. That's why I was saying with Bitcoin, if you are trading down to the trend line, the best thing to do is just to book profits initially, let that kind of fight take place, and then look, it breaks, and then you get the opportunity just to continue down. So we are now getting this breakdown. We're breaking down below the prior monthly low over here. And you can see this forming this kind of bear flag over here in the 4 hours. So below this monthly low, I know we have another month down here, but this really is the workspace for Ethereum that you can work with. Below this monthly low, all the way back down to the bear flag low, and potentially lower. I mean, we could very easily be coming back down to the low over here. But at least for now, I'd be looking for the 17, say 50 area roughly, as Ethereum starts to make its way back to the bear flag low. Okay, so let's look at some of the non-US dollar pairs, starting with the Canadian dollar short theme. So a market I really like going into next week is CAD franc. The sell zone starts at the 0.5703. And just above that, we have this really nice previous support level. So a kind of stair step, pulls back into the moving average, into the sell zone, into the stair step. And I would be looking for a 1 or 2 day reversal back towards the middle of the range. Or if you want to hold on to this for a bigger swing trade, of course, back down through the lows, looking for the next, there's your lower high. You'd be looking for the lower high over here, and then of course a lower low, so a trend continuation. Either way, I can only short this market. I cannot buy this market under any circumstances. So if we look at this on the multi-charts, you can see bouncing off the 9 EMA in the monthly. In the weekly, we're now breaking out of this kind of double top almost. The Canadian dollar, in my opinion, is in a little bit of trouble here. And again, we've discussed the fundamental driver of that, the Bank of Canada not being able to raise rates in the same way as its peers are. But this kind of area here, we've got the 20 period moving average in the daily, the prior swing high, and the kind of stair step. And that's also where the sell zone sits next week. So I'd be looking for a pullback, an attempt at a break through last week's high. And I would be looking to take the other side of that trade for a 1 or 2 day reversal back inside the range next week. Next is AussieCAD. I can only be a buyer of this market heading into next week. So what I'm looking for is a sell-off in AussieCAD and a trade below the 0.9837. This is where we turn oversold next week. And there's a really nice prior monthly high that sits right here that can act as support. Looking for a 1 or 2 day bounce back inside the range next week in AussieCAD. And if I pull up the multi-charts, you can see this is the monthly high. So we're kind of trending up, we consolidate, we push up, we test the highs over here of the month, we bounce, we pull back, and right here would be another test of the last month's high, or now would actually be not last month because that's here, but the prior month's high right here. Looking for a kind of sell-off intra-week and a bounce for 1 or 2 days from this area heading into next week. Next is New Zealand CAD. Now I can only be a buyer of this market, cannot sell this market under any circumstances. We had a massive rally last week in the New Zealand pairs, not just New Zealand CAD. And this is now 2 things. One, it's a breakout and a momentum change because we took out the gold level, so the second weekly upper bound last week. And 2, it's a Monday, Tuesday reversal play because we spent the entire week pushing up and we've yet to pause or correct. And generally speaking, that happens on the following Monday, Tuesday, can be even Wednesday. But most of the time, statistically speaking, you get it on the Monday or the Tuesday. So what I'm going to be looking for next week is a Monday, Tuesday pullback, and ideally a move all the way back down into the buy zone. That starts at the 0.8190, and there is a really nice prior high right here that I'd be looking as a potential pullback and an opportunity to buy the dip for a bounce to the upside in New Zealand CAD. So if we look at this on the multi-charts, you can see this was the breakout to the upside. Unfortunately, I actually was on the wrong side of this with a couple of positions last week. And until the last week or so, I had actually been over 6 months of not taking any losses at all, of over 1.05%. But unfortunately, we can't go on forever in trading without taking any losses. And last week, I did actually have to give a little bit back off the top. Very often, we have to give 1 back or even 2 back before we can take 2, 3, 4 steps forward once again. So going into this week, I do want to be on the long side of these markets. I want to look for a pullback, a trade below the 0.8190. And this is where I'd be looking for that 1 or 2 day reversal in line with the prevailing breakout and the move to the upside. GbpNzd, this is a market I can only be short now going into next week. So I'd like to see this market pull back. This was actually one of the markets I was on the wrong side of with the New Zealand pairs last week. I actually bought in over here and this thing just tanked. I mean, this thing is, it's a reversal week. I mean, we take out the gold levels, to the upside or the downside. It is abnormal momentum. It's only expected to happen kind of 5% of the time. So when it happens, that is the market telling you a significant, trend change is taking place. So I do want to be in the direction of the trend coming into this week. What I need to see first is a pullback. This is also a Monday, Tuesday reversal play because it didn't reverse last week. But you wouldn't necessarily, maybe if it pushes down on the Monday, this would probably be a pretty good mean reversion trade for a day or two. But generally speaking, I would like to see this come back into the sell zone above the 2.2663. And this is where I'll be looking for a 1 or 2 day reversal to the downside, and you could again potentially look for that swing trade back to the prior low, you know, if you get this kind of bear flag like this. It is non-farm payrolls next week, and generally speaking, markets are a bit choppy and quiet in that week, so I think there's a pretty good chance we do get those Monday, Tuesday reversals in the New Zealand dollar pairs early next week. Next is Euro New Zealand. So again, I can either be short now going into next week, looking for short opportunities, or do nothing. I cannot open new long positions in Euro New Zealand heading into next week. If we get this pullback, and again, you could look at the Monday, Tuesday reversal play, but we're not actually overextended to the downside yet. But if we can get this pullback, going to be looking for a move into the prior low as a kind of stair step, kind of like over here. We push up, look at how we stair step into the prior high. We push up, and we kind of make this attempt to come back and stair step. So that's what I'm going to be looking for. I'll pull back into this area, into the moving average, and looking for this to set up as a bear flag. So here's the momentum. Momentum precedes price. Looking for the pullback and then looking for that 1 or 2 day reversal. In this case, you could probably again look for the swing trade back down to the low, or even, you know, through the low and hold on to it probably for a couple of weeks. So let's have a look at the multi-charts. Now the multi-charts here are quite interesting because we do have the 20 period EMA in the monthly. So overall, this is kind of setting up a bit of an A, B, and a C. Now, if we start to get risk off coming into equities, this is the kind of area where you'd expect a bigger bounce and reversal. It's too early to make that assumption. You know, right now, I do want to be primarily, especially just looking into next week, I want to be looking for the pullback and look at the way this is extending away from the 50 period moving average. This does need to pause and correct. And as we get the pullback and at any trade above the 1.96260, that's the kind of sell the rip opportunity. And again, preferably if we could stair step the prior low, that is where I'm going to be looking for a 1 or 2 day reversal to the downside next week. GbpAUD, this is a very straightforward one. This is a market I'm looking to be short. And we have a really nice key area of resistance inside the sell zone, which starts at the 1.88719. So going into next week, I would like to see this push up and ideally take out the prior high. This is where I'd be looking for a short. Very similar to what we looked at in the Canadian dollar pairs, where we've got this kind of push up in the CAD. If you look at CAD futures, they're pushing up. And then we've got this kind of ABC in the bigger time horizon. We'll look at that next. But that's what I'm going to be looking for a move 1 or 2 days back towards the 20 period moving average. So just quickly, look at the Canadian dollar on the monthly time horizon. This is what I was talking about here. We had that push up, we pushed up and we failed. And now we had this reversal month to the downside in the Canadian dollar futures. And at the same time, this is coming just as the Canadian economy is going into a recession, or is actually already in a recession. So again, CAD short theme at the top of my list heading into next week. And the final Forex pair before we move on to crude oil, gold, and silver is EurUsd. This is a market that I'm looking to be short in terms of portfolio selection. And again, we have a really nice key area of resistance. And look at the way it's crisscrossing the moving average. It's ranging. It was trending, and now it's ranging. And so if we can push up into the top of the range at the 1.63835, not only do we turn oversold during the week above the 1.6344, but this is also going to be a really nice opportunity to trade back towards, first and foremost, the middle of the range where that moving average is, and then you could even look for the bottom of the range down here. But for me, this is the high probability opportunity for 1 or 2 days I'm going to be looking for in EurUsd next week. Okay, so moving on to crude oil before we wrap up with gold and silver. And this is the big pattern that has now developed in crude oil. We've just finished the month, so now we've had a second inside month. You can see this pattern over here. It's a monthly pattern. And here's the thing, you do not very often, in fact, it's extremely rare that you get a big move up like this, you get a double inside month or candle, and then you immediately sell off like this. Very, very unlikely that's going to happen. You at least need a failed attempt usually. And then if it fails, you can come down. So there's a very, very good chance, in my opinion, that crude oil is going to head higher, at least to take out the 109.55, which is last month's high. And it may push down first, it may come down and start to take out some of these lows first, but I do think this is going to make an attempt up towards the 109.55. This is the area to look for a breakout. If we trade into last month's high at the 109.55 and we start to accelerate through, that opens up the 119.45, which is the pattern high. And above there, you can actually get a 1-to-1 with the pattern. That would actually take us, technically speaking, up to the 156.30. 156 crude oil is, global recession territory. So I'm not saying it's going to get there. I'm just saying that's the technical target. But it does show you the upside potential for the current crude oil price and this pattern setting up. So really, I would only be looking at this in terms of a breakout, the 109.55, and it might chop around a little bit first, but the 109.55 is the line in the sand. I'd be looking for a break of that high, and that will tell us whether we're about to get a reacceleration to the upside in crude oil. And if we are, that is going to drag the US dollar to the upside, and it is going to catalyze a US dollar bullish breakout from the bottom of the channel because of the correlation between the dollar index and crude oil. Okay, so wrapping up the video with gold and silver. Now, what I love about these markets heading into next week is they're setting up the month in totally different directions. Very often gold and silver move together. But what we've seen is we've seen this kind of pin month where we've got this kind of wick on the bottom, which shows buying coming in. We reclaimed the prior month's low. This is actually a bullish monthly candle. And when we go and look at silver next, you'll see that it's actually doing the opposite. We have a bearish monthly pin candle. So what I'd be looking for here then is looking for a workspace when you're trading breakouts or you're trading markets on a breakout instead of mean reversion. So going into next week, what I'm going to be looking for is either an opportunity for a breakout to the upside in gold or to potentially sell silver on a breakdown. And what we want to do here is we almost want to create a workspace. So where does gold actually have the ability to start working? Well, not really from where we're at, because we've got two weekly resistance areas right here, the prior weekly candle highs. However, if we can break above the 459.50, so it's an if-then process, even though it's not mean reversion, it's still if-then. If we can break out above the 459.5, then I would be looking for a consolidation. And you can see now we've got room to work. We've got plenty of room to work above the 459.50 up towards the prior monthly high. We're in this kind of big descending triangle pattern. So we're correcting, we're chopping around. So this is the workspace I'd be looking for to the upside in gold. It would be predicated on the US dollar selling off. So if we get very, very weak dollar price action, which again, I'm not expecting, but if we start to see that, then I would look at gold for a breakout above the 459.50, and that's where I'd start to look to initiate longs, buying dips up towards the prior monthly high, which is this candle high, at the 4773.53. And so finally, if we look at silver, silver is the market that I'd be looking to short. I'm not a huge fan of shorting gold anyway, many of you know this, but if we get a stronger dollar, both gold and silver are going to struggle, silver more than gold. So silver becomes the preferable short when the dollar is strong, and gold becomes the preferable buy, generally speaking, as a rule of thumb, when we have a weaker dollar. So again, if we just break this down, you know, where is the workspace here? We don't have any workspace to the downside until we can get below the 73.80, because below here, this actually sets up workspace down to the 69.51, because a break down below this weekly low here, that is going to set up a move first and foremost to the monthly low down here, but we could very easily make our way back down towards the range low, the overall range low, right down here at the 64.50 area. As you can see, this actually would be a return to the weekly 50 period moving average, which is where I ultimately think we're going. If I had to absolutely guess, which of course we don't really, we can just trade reactively, but I would hazard a guess that the dollar is going to break out to the upside as crude oil pushes higher, and that's going to push gold and silver lower. And so the break of the 73.080 sets up a move first and foremost to the 69.51. But then, because we've lost the 20 period moving average already in the weekly time horizon, this greatly increases the odds of a move back to the 50, which happens to sit right at the pattern bottom. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.